Well, traders, they did a little bit of buying in the last reported COT report, but it's not what you expect. It's actually not the NASDAQ, although they may have bought some of that too. It was actually much more so gold. Take a look at this gold as our biggest increase in terms of overall positioning here from institutional traders. They changed long contracts substantially, adding to their long positions and decreasing to their short positions. This is a very bullish week over week change that we see taking place in gold. I thought that was worth mentioning as gold is the most, at least up to the latest available commitment of traders data, the most bullish on our list of institutional positioning. We're tracking this through the non-commercial COT data as we do in every week's video. And what we can see here is, although gold, I've been keeping an eye on this, they've actually been kind of decreasing long exposure. That changed suddenly here in the latest report, where institutions seem to have added some long positioning in the gold market. And real quick, as we get started in today's video, I wanted to make sure to do a bit of a last call on our discount season of the year. We do Black Friday and Cyber Monday. It's our lowest prices of the entire year on Edgefinder and Stockbox and our VIP group and all that good stuff. But I just wanted to make sure that if you have not already taken advantage, we're going to leave this open through the end of the day, and then that is it. Our sale for the year is ending. Everything currently in the Edgefinder, the COT data tools, our momentum screeners, our top setups algorithms, and all the stuff that you see in my video is currently on super sale for 40% off. I'll leave, like I said, last call on that. The discount information can be found in the description down below this video. So as I am currently long gold myself here, this was definitely a welcomed piece of information from the institutional side of things. That heavy accumulation of gold from institutions gives me a little bit more resolve that I want to probably stay with this trade. There's a number of reasons that I've talked about many times on my channel, including national debt to GDP concerns internationally, rate cuts from major central banks all around the world. There are many reasons that I still think that a overall exposure to the long side of gold is something that I want to maintain. Whether from a trading perspective, I'm generally going to lean bullish, but also from a longer term kind of holding position type of thing. I have gold and silver in my various portfolios that I kind of hold longer term. Anyways, with gold here, let's just take a look at the price action side of things. What you can see here is that we were able to get above this area, but it's really been, to be honest, a not very impressive last week or so from gold. Gold really hasn't been moving very much. I do still think that there is a good shot that we do see fresh highs here in the coming weeks, maybe going into 2026. But I will have to call the trade good, as in take profits on the trade, if we break through structure. I do have a rule system that I follow with my trading strategy. I did get the bullish, green light from Edgefinder. I liked the setup. We were holding support in the 20 period moving average. I went long. But I do need to see this thing continue to put in some sort of higher low, higher high sequence in order to stay with the trade. From a longer term perspective, when we take a look at the weekly time frame, again, just a bit of consolidation taking place here recently. Looking left, we've just been stuck in this range. I wouldn't call this bullish or bearish. It's just choppy, just range bound. Generally speaking, though, the longer term trajectory of gold remains to the upside. And so I'm viewing this as innocent until proven guilty. We take a look at the monthly time frame, straight up and to the right. And a common thing is when people see this type of chart, they say, well, that's going to come crashing down. And eventually gold will have some sort of larger scale pullback and correction. But I'm just not a believer in trying to time when that will take place. In fact, there have been, quite literally millions of people who have been trying to call a top on gold for over the last year and a half. And it's just been a fool's errand to try and do. It's a really difficult thing to call the top of a precious metals market boom. And I still think that we are in one. So I think there's more upside. I also really like silver. If we take a look at the silver side of things, actually the technicals on silver look more attractive in my personal opinion than gold. But I just wasn't able to get the entry. I was able to get the entry on gold and it met up nicely with overall scoring from the edge finder, which of course is pretty imperative to any sort of trade that I'm going to take. I like to see a bullish setup forming when I'm looking to take the entry. Currently, here's a look at the top setups page overall on Edgefinder. What this is doing, if you're newer to the channel, it's giving us an overall score for currency pairs, commodities, indices, basing it on market sentiment, so crowd sentiment and institutional positioning. It's looking at technical readings like momentum, trend, seasonal trends, etc., and it's looking at economic data, scanning the macro fundamentals to build a bias for me. And so some of the things sticking out to me on this right here, right now, is that things like Euro dollar, Kiwi dollar, and Aussie dollar are getting bullish readings. What that really signals to me is that the dollar is getting some weaker readings here in the Edge Finder recently. Noticeably, it's a lot to do with the macro. Economic data seems to suggest some of these other currencies may be taking a little bit of a turn to the upside, which actually kind of makes sense when we scan over to the US dollar. I actually agree with the short-term bearishness for the dollar. We have a little bit of a resistance point coming into play around the 100 level, which ultimately did break down and actually broke and failed at this key level of support. We broke and closed below with the decisive kind of price action, and I do think that the path of least resistance for the dollar is to move lower. There's also a really big tailwind, well, I should say headwind to the dollar, a bearish case right now, in that Kevin Hassett, the new Fed chair, which is almost all, I'm pretty much certain, it's very likely he is going to be the next Fed chair. Something could surprise us, but that is likely the next Fed chair. And he is an ally of the Trump administration, which means he is probably going to push for rate cuts and easing on the Fed funds rate, which could potentially send the dollar lower. So I thought that was kind of an interesting point. Dollar index to me in the short run does look like it has some potential weakness if we take a look at some currency pairs. Euro dollar, I think euro dollar has something to prove here in terms of a resistance point that it currently sits at. But if we get head and shoulders above this 1.17 level on the euro, I do think that we have potential to make a little bit of a continued short-term upside move in tandem with that dollar weakness idea that I just mentioned. So euro dollar is on top of the list. I agree with that call. If we take a look at NZD USD, right, we can see something similar here. I'd be looking for either a pullback into this area and then looking for continuations, or a break through this area, looking for pullback and continuations there. But I do see this one also potentially making a move higher. So currency is actually looking quite interesting for new trades. I have several positions open, one of which I've talked about quite a bit on the channel, is my continued bullishness on US indices. Now I want to talk about this really quick because while you do see things like Dow Jones here on this list and the Russell, which are also, of course, US stock market indices. This is US 30 and US 2000 for my CFD traders in the audience. Indices are still overall getting a bullish reading here, but you don't see NASDAQ on the list. And I want to show you as to why we are getting some not as positive things for the NASDAQ, for example. So NASDAQ has a +4 score. That is still, it leans towards bullish. Remember, 5 or greater on Edgefinder is considered bullish. And so we have a +4 score. So it's close, but not quite. Where we're losing some points is actually market sentiment. This is interesting. So crowd sentiment is actually bullish. Let me show you. So what we're going to do here is we're going to navigate over to, this is what the Edgefinder does, is it looks at crowd sentiment through the use of the put to call ratio. So I'm just going to collapse some of my indicators here. Let's go put call ratio. And I want to show you this right here. So just take a look right off the bat. S&P 500 call volume is very high right now. Okay, so bullish sentiment is at a high. Crowd sentiment has actually flipped back bullish. Now, in the recent weeks when we had this pullback, I was in there buying the dip on that. I, liked the idea more because crowd sentiment was bearish. And I like to actually be contrarian with that put call ratio. It's one of my favorite indicators for timing or assistance in my timing. I like having the macro as well as sentiment gauges kind of pointing towards some bullish opportunities before taking a long setup. So anyways, with this market ripping here, right? S&P 500 and NASDAQ doing quite well in recent weeks, we've seen the crowd flip back into positive territory. Noticeably, the crowd gets bullish again once the market's back already up. So kind of interesting how that works. But take a look at NASDAQ, same story. You can see we have a little bit of stretch sentiment here where crowd is getting bullish again after the run up in stocks. So in terms of the indices, if I take a look at this, I want to kind of illustrate something. So I am still long the NASDAQ. I bought it over here at this October 10th low. Things are still looking really good on my trade, and I do actually think that NASDAQ can continue to drift higher. What this reading means here means that for me, I'm probably not looking to add any new entries on the NASDAQ score. So a +4 reading, part of this would deter me from entering another position because sentiment crowd bias kind of has flipped into the bullish territory. So how will I use that score? Sometimes people have the question, they say, well, Nick, now that Edgefinder has lost that bullish rating, does that mean that you close the position? And the answer is no. That's not how I use Edgefinder. Some people may choose to use it that way. It's totally up to you. Edgefinder is simply a screening tool. It's not necessarily a timing tool. But Edgefinder overall giving me a +4 score, while it has dropped a few points in score, I still like the upside because technicals still look very constructive here. I pointed this out in a recent conversation that I was having with some members inside of our Discord. We still held this 100-day moving average. We held a 50-day. You know, this, generally speaking, has been a very constructive overall upward trend, and we've rebounded really nicely. So I think the path of least resistance is to the upside. However, how I'm going to manage this position is I'm going to continue to trail my stop loss. So my initial stop loss was down here. You can see we barely avoided getting stopped out on this trade, which is, you know, it's going to happen sometimes where even you do get stopped out and it reverses, and those are frustrating. But in this particular example, or this case, I didn't get stopped out, which is nice. Price reversed, moved higher, and we actually broke above this critical level of support that we've talked about here. It was major resistance. Noticeably here, for those of you who have been watching, then you know we've referred to this as kind of the NVIDIA post-earnings candle, where NVIDIA came out with excellent earnings. The stock market jumped higher on that excitement and faded hard all throughout the rest of the day. Now, what was so interesting about that was that flushed out a lot of the euphoria, the sentiment real quick in this market. And in a very kind of got you way, the market actually bottomed out after scaring everybody out. Everyone panicked. Oh, the AI trade is dead. You know, they're selling NVIDIA right after excellent earnings. This is terrible. And then the market bottomed right after that. So kind of interesting. Anyways, that reversal here has been excellent. And this level here has now become kind of my action line, where when we came up to this level, it was a big thing to see if we can break through it. We did break through it. We actually retested that area again. Notice how price bounced right off of that area. So I now have my stop loss trailed below that area. So if the market comes down here and we cannot hold this area, meaning we can come around here, that's perfectly fine. If we pull back to that area, it's completely normal. The bigger question would be, as you come down into that area, if you fail to hold it, then I'm going to take my profit on the position and close out. However, if we come down to this area and we hold it and we make a move higher, then I will continue to trail stops. So let's just give another example. Let's say that from here, we're currently still sitting at another resistance point. Let's say that we don't pull back at all. We just shoot higher. At that point, what I may choose to do is manage the stop loss and lock it further into profit. I like to trail stops because it, to me, is ideal because it allows me to ride some of the biggest trends that do periodically happen in the financial markets. So I do think that there's upside in the NASDAQ. I continue to ride that. Same thing with S&P 500, though I don't have any positions. You're actually very close to a new all-time high. In fact, we are we're less than 1% away from a new all-time high. And it is amazing how quick this sentiment went from, you know, terrified to people are feeling a little bit better here all of a sudden. Let me show you really quick through some more sentiment gauges. If we take a look at the AAII Investor Sentiment Survey, what you can see here is that we had a significant bump up here in the last week. in bullishness. So we went from 32% of respondents saying they feel bullish on the market up to 44.3%. So we had a big surge in bullishness in this market here week over week. I thought that was really worth mentioning. And it is another reason why, again, this puts me on pause to adding a bunch of new money or new long positions in the stock market at this time. I like to be long markets when people are a little rattled. Honestly, it produces, in my view, a much better risk to reward ratio when you get people kind of panic selling, honestly. And so when we have that kind of reversing and people are like, okay, they're, the shorts are getting squeezed, they're throwing in the towel, they're like, all right, let's chase this thing higher. And everybody's kind of confirmed, all right, market's going up again. That's where I don't necessarily get bearish just because of that, but I may choose to pause on adding new long positions. So I won't be adding anything to my, NASDAQ, my longs in stocks, etc., at least for now. But I will continue to watch them and manage the position. I think path of least resistance for the NASDAQ, for the S&P 500 is a push back and through all-time highs here by end of year. I still think that's very possible and very likely. So we'll see. Dow Jones, same kind of concept. We look pretty good here. Look like we are likely headed back to the highs. Here's a look at the Russell. The Russell actually did come back towards those all-time highs. Looks really good here. You have some resistance, obviously, the prior all-time high, but I think that we have overall a good chance of also seeing the Russell break higher. You have rate cuts likely coming down the pipeline. We're probably going to cut interest rates in the upcoming week, and that I think will continue to be a tailwind for especially borrowing rate sensitive types of areas of the market, like the Russell, right? The Russell has a lot of finance companies and healthcare companies and real estate companies that are very sensitive to what interest rates are doing. Speaking of interest rates, let's just take a quick look. Here's the 10-year yield on a weekly time frame. We are generally trending lower as expectations for rate cuts continue. Let me also show you something here. If you go in Edge Finder and you go under interest rates, we have an interest rate projections tool, which is pretty cool. We can isolate just the US for a second and take a look at this. What we can see is interest rates going into 2026 are anticipated to continue to come down overall. We can see projections are for going out to, towards the end of next year to be around 3.5% in terms of a US interest rate from the federal funds rate. So, we look overall pretty good. I haven't looked at this chart in a second, so I just want to pull it up, see if we can get this to load here. This is the U.S. Treasury yield curve. This is just taking a look at 10-year yield minus 3-month yield. And kind of interesting, we've actually come out of that and come out of this. And, a lot of people have actually pointed out that a lot of recessions happen after the yield curve inversion unwinds or becomes, normal again. And so I'm curious to see, if we have that happen again. Actually, all of these scenarios that you see where we've come out of this and back up have coincided with times where we've had a rocky recessionary type environment. A lot of people would point out that you have concerns on the consumer here recently. So I don't know. We'll continue to watch that. Just taking a quick look on that subject on the U.S. economic heat map. Here's my thing with it, right? There's been for years people saying, the consumer's in a terrible state, the housing market's locked up, we're going to have a crash in the economy. And I get that, right? There are parts of the economy that are hurting. But when we take a look at an aggregated overall basis, the stock market keeps going up because GDP growth still looks strong. Earnings for corporate earnings are still very strong, right? You have these AI companies, whether it's very K-shaped, right? So there's a K-shaped economy in many ways. From the consumer perspective, right? The rich, the wealthy, upper middle class, they're doing quite well, while people who do not have assets like real estate and stocks are not doing as well. Well, same thing in the stock market world even. Stocks that are taking part in that corporate earnings spend going on around AI and tech and all those data centers and stuff, those types of companies are doing excellent. Companies that are not necessarily like, for example, retail, consumer stocks, right? Restaurants, housing stocks, they're not doing nearly as well. So there is some, but when we take a look at the overall, people who are frustrated with the stock market, you still have to understand the market doesn't care that there's parts that aren't doing great. The market cares that aggregated overall, the AI stuff is so strong right now that GDP growth is rock star. And so again, corporate earnings at those big winning companies continue to be strong, and that is bolstering stock prices higher. So PCE came out this week. It was better than expected on a year-over-year basis. That is excellent. Continues to support rate cuts are likely coming down the pipeline. Jobless claims were good. That's a good indication of the jobs market being maybe a little better than what was previously anticipated. NFP was good. ADP was bad. Job openings here. This is a little outdated data, so we'll ignore that. We can see when, if it's in yellow, what that tells you is that it was reported in the last 7 days. We programmed our tool to highlight kind of the recent figures to keep us honest on what's been coming out here recently. But in aggregate, U.S. stocks still look good here from our scoring overall because most of our metrics, cooling inflation, decent economic growth on an aggregated basis, look good. So I remain positive on stocks until this changes. And I've had a lot of people, very, very cautious, very pessimistic, very bearish people watching my videos and leaving comments. And understandably so, because it's been a really hard market to fight against. If you've been a bear in the last few years, it's been pretty punishing. There's been massive gains to be made. And the thing that I keep saying on my channel is I am a reactive trader. Now, what I mean by that is to the perma bears who keep commenting on my video and they're like, "Oh, you're just bullish and blinded, and eventually you're going to lose everything because the market will crash." Look, I'm a trader, so when I look at this, right, when I look at this market, the market's moving up. It is hubris, in my personal opinion, to constantly say the market's going to crash. I know it's going to crash. I know it's going to crash. I know it's going to crash. Instead of being a trader who says, sure, it'll eventually crash. Everybody who's, complaining and whining and screaming that it's going to crash, they will be right eventually. But in the meantime, trend followers are making money hand over fist, riding trends and having the humility to just say, I don't know when it's going to crash. And maybe it doesn't crash for 5 years. We don't know, right? Trend followers have here's the thing about the perma bears, right? The perma bears claim to know everything, whereas trend followers claim to know nothing. I mean, they do. They claim to know what the trend is and to follow the trend. So for me, that's what I do. I don't predict exactly what the market's going to do and when it's going to top out, when it's going to reverse. I follow trends, and that's what I continue to do on my channel. If you're interested in trading alongside me, I would encourage you to come join us inside of the VIP Discord. Inside of the group, I share every trade that I'm taking. Index trades, commodity trades, Forex trades, stocks and options. We also have Marco, Chris Pulver, and Ivan sharing their trades inside of the group. We have verified track records, we trade real money, and we share our wins and losses. Overall, I have done well in the markets, not by trying to predict its every move, but simply following macro and price trends and keeping things simple. If this is something that you'd be interested in doing, I highly recommend you take advantage of our Black Friday / Cyber Monday discount deals before they end. Today is the last day. Don't miss your chance, because again, once these prices go away, the Edge Finder goes back to its normal price, VIP group goes back to its normal price, which is, again, we're currently 40% off right now. So you'd save a ton, as opposed to if you wait 1 week from now and you're like, all right, fine, yeah, I'll get it. So don't miss it. I'll leave all the information in the description for you. With that said, thank you very much for watching. Have a great day ahead.